Good morning. Happy Thursday. It is a very happy Thursday as it is our last class of MEL3E, our Math for Everyday Life course. I shouldn't be this happy. I am so glad to have worked with all of you throughout this course, but let's be honest, summer is around the corner, and you've all worked hard. You deserve a little bit of a break. So I am happy for you to have made it this far, to have worked with you up until this point, getting through the entire MEL3E course curriculum material. Well done, team. Today we are simply going to run through our Unit 1 and 2 review. As I was out in Frenchman's Head yesterday, our class did not take place. So this afternoon, you'll hear me pop on at 1 o'clock, where I will finish the Unit 3 and 4 review so that you have all of the information in one/two convenient places, as we'll do two separate recordings for your review. They will be posted to our Google Classroom as well as our WASA YouTube channel. So if you are at the end and you're ready for your culminating activity and you want a convenient place to just jump on and get the synopsis of what happened in the lessons, feel free to tag these to classes that will be recorded now and this afternoon. I would like to get through 10 lessons in this class. We're going to run through lessons 1 to 10, and then this afternoon's class will look at lessons 11 to 20. We won't be going through support questions, question examples as we go for time's sake, but if you are practicing and you want to pause the recording at any time, feel free to do so. Try your hand at the support questions and then jump back in and pick up where you left off. So, today we are on our last radio broadcast. Our term to be ends tomorrow, Friday, June 13th, but we never broadcast on Fridays. It's that chance for you to get caught up on work. Please, if you have not submitted any of your work yet, or whatever hasn't been turned in yet, please be doing that today and tomorrow, especially if you have graduation in your sights. Our grad is taking place here in Sioux Lookout next Thursday, June 19th. We'd love to celebrate your successes with you, see you walk across the stage. Make sure that all of your work is in so that your diploma can be made up on time. Remember to submit work. You're only submitting the key questions. The support questions are what you're going to do throughout the course to give you that extra practice. When you submit lessons, you're also getting your name entered into a draw for a chance to win $100. You complete a lesson, hand it in. Your name gets entered for each lesson you submit. Because we finished 20 lessons, if you handed in all of your work, your name will have been entered 20 times. If and when you complete the culminating activity and you are successful, you will obtain the credit, and then your name will be entered into a second draw for a chance to win another $100. You can submit your work multiple ways. You can scan and email it. You can take a picture, email it. You can send it through Facebook Messenger. If you're emailing it, please send it to studentwork@nnec.on.ca. If you're in community and you want to go to your learning center, hand your work to your DEC. They can send it in to us. If you find yourself in the area and you want to stop on by, come on in. If it's after business hours, we do have a mailbox on the outside entrance that you can just drop it into there. If you have any questions about any of the material or the culminating, please do not hesitate to reach out. You can email me at Jacoba, that's Jacoba, .flat, F-L-A-T-T, at nnec.on.ca. You can call me at my desk, 807-738-1488, extension 2228. You can call WASA toll free at 1-800-667-3703. If it's easier to connect on Facebook, you can find me at jflatwasa. Let's jump into our Unit 1 review. We're going to review the curriculum content from the first 5 lessons, going through those key concepts, and then jumping to Unit 2. Reminder that our culminating activity is not an exam. You don't need to come in, you're not put in a little cubicle for 3 hours. You can think of it as an open book exam or more like a project where you get to demonstrate all that you've learned throughout the course. So hopefully no stress. Hopefully it's just going to be like our review run through for you, a chance for you to go back and show what you remember all the way from Lesson 1. Lesson 1, we talked about earning an income. We looked at salary. We found that salary is paid on a yearly amount for a set number of days and hours. It depends on your contract, but most professions, or I should say the common professions that are paid by salary include teachers, accountants, pilots, computer programmers, and obviously many more. These are just a few examples. Fixed payments are those regular scheduled payments happening at regular intervals, usually a set amount on a set time. If your salary pays you monthly, that means it's happening every month. You're getting a paycheck once a month. There are 12 months in the year, so it's happening 12 times a year. If you get paid semi-monthly, that means it's happening twice a month, so 2 times in a year. Because there are 12 months in a year, 12 times 2 is 24. Getting paid semi-monthly means you're being paid 24 times a year. If you get paid weekly, you are getting paid every single week. There are 52 weeks in a year, so you're being paid 52 times a year. Bi-weekly is every second week. You're skipping a week. So it's not semi-weekly. You're not getting paid 2 times in a week like semi-monthly. You're getting paid every other week. So that's happening 26 times a year. When you go through your key questions, when you go through the culminating, make sure you know these terms and the compounding period in which it's happening. So monthly is 12, semi-monthly is 24, weekly is 52, and bi-weekly is 26. Now lesson 1 also talked about piecework. Piecework is an income based on the number of items produced or sold. Your earnings can sometimes include a combination of salary and piecework. So you get a base salary, and then you can also get that bonus piecework of however much you produce or sell gets added to your paycheck. With piecework, you can control how much you get paid based on how much you accomplish. This is great for if you've got a financial goal that you're aiming for. You can work really hard till you reach that $800 goal that you're trying to achieve, and a lot of times it is your hard work paying off. We're going to compare that to commission in the next lesson. If you want extra practice with the concepts of salary, calculating salary, and piecework, please go now to the support questions. We are going to continue on to lesson 2, where we build off of lesson 1 and further talk about hourly rates and commission. We know that salary is a fixed period, a fixed amount over a fixed period of time. Hourly rates are when an employee is paid a fixed income per hour regardless of amount of work done or assigned. Most hourly rate workers have the option of overtime. When hourly rate workers work beyond the regular daily hours or weekly hours given, they will receive time and a half, which is truly 1.5 times the regular hourly rate. Now, this applies to all work above and beyond 44 hours a week. 44 hours a week is the standard, it's the legal, it's the set, but some organizations, companies, they might have a work week in your contract that says you're working 38 hours or 35 hours. If you work beyond that, then you get time and a half. The set standard of 44 hours applies to all companies that they can't ask you to do more than that. Anything above that, you receive overtime. So piecework we talked about, it's getting paid based on how much you produce or sell. So if I have a goal of $800, I need to raise $800. I can work really hard at making something or doing something. I can cut lawns, I can shovel driveways, I can sell newspapers. The more that I do or sell, the more I make. And so I can work really hard to make my financial goal a reality. Commission is when your earnings are based on how much you sell. So this is a straight selling option, which sometimes you can work really hard at, you can be really good at and get good commission, but other times it's not really up to you. If nobody comes into your store, it doesn't matter how good of a salesperson you are, you can't sell to somebody who's not there. So it's a little bit different than piecework. Much like piecework though, you can have straight commission where your earnings are based 100% on commission, but like piecework, it could be split. You could have part salary, part commission. Graduated commission is when you've got that part salary, part commission. And the rate will vary depending on your industry, your employer, your position, your experience. If you want more practice with that, turn to your support question. We're going to keep going to lesson 3. Lesson 3 talks about gross and net pay. Again, we're building off of what we know about salary and hourly rates and the compounding period of monthly, semi-monthly, weekly, etc. Now we're looking at income overall. Gross income is that large. Think gross, large, big. It's the total income earned by an individual. It is stated on your paycheck, but dun, 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 it's not how much you actually get. The gross income is that large, overall encompassing, but the net income is the total income that an individual actually takes home. Your gross income is the whole big picture, but there are those deductions. Remember, deductions are the amount that your employer takes off of your earnings, and it goes towards paying for various services, various plans. So yes, you might be making this great amount, but then deductions happen. Money comes off. So the net income is what you are left with. That is why when you budget, always budget with your net income so that you are working with an actual amount that you have. If you're trying to budget off your gross income, you are going to end up in the hole not having enough money because of those deductions that are taken off. The common deductions that every employee must pay include income tax, Canada Pension Plan, employment insurance, that's the EI. Other deductions, depending on your workplace, depending on your organization, they could take off company pension plans. They might take off fees for union dues. They might take off fees for your health benefits, life, health, dental insurance. You'll want to check especially if you're applying for a new job, what those are, what will come off, and if it's right for you. Support questions are available on pages 19 to 21. There are 6 support questions for lesson 3, a great chance for you to be practicing and then flipping to the back of the unit, checking the support question answers to make sure you're on the right page. We're going to skip through them for time's sake. If we have time at the end, we'll definitely come back and do some of those. Lesson 4 talks about paying taxes. We know now that tax is a mandatory payment that gets made to the government. We know it can be levied upon things such as income, property, as well as goods and services. The income that's generated from taxes then gets used to support the government and their programs and the services that they provide. In your key question, it asks about why does the government charge taxes? Why are there taxes on certain things? And we know it's to help pay for other programs and services. So think of the things that we don't pay for. We don't have toll booths on roads in our area. Yes, sure, on the 407 you're paying, and in the States you're paying, but here you can basically come and go on any road. You can choose to take the toll road in southern Ontario if you want, but you don't have to. There are other routes. So think about the things that we're not paying for, like healthcare and education, and so how it all comes back and supports like a circle. In lesson 4, we talk about the T4. The T4 slips are completed and given to employees by the employer. So I might receive it in the mail. I might receive it through an online program because it's 2025, but it's all coming from my employer. And some of us have more than one job, so you can have more than one T4. A T4 is an official record of your employment income earned. So if you have 3 employers, you need 3 T4s to show that official record. So it's the amount of income earned that calendar year. It also shows the amount of income tax, the amount of CPP, that Canada Pension Plan, that EI, the employment insurance that's paid that calendar year. It will show other deductions made that affect income tax, such as charity donations or other pension plans. All of that is recorded on your T4 and needed for tax purposes. Now the T5 is a different form. These are slips that are completed and issued by banks or other financial institutions. Again, you might be investing in different pots, and so you get more than one T5. It's a statement of your investment income, how much you are investing. It keeps an official record of the interest earned by invested money or saved money. Interest is considered income and therefore is taxable. So when we do the support questions, you have to add your income from your T4 with the taxable income on your T5. Then for funsies, we got into tax brackets. We talked about how Canada uses a progressive or a graduated income tax system where your earnings are taxed at higher rates, the higher the tax brackets, as your income increases. We know that tax brackets determine the rate of tax paid for each additional dollar of income within. We quashed the myths of this is how much you make, this is the income bracket you're in, everything gets poured into that cup. But we know now that is not true, that you can line the cups up. Those are each of the brackets, and you pour it in until it fills, and then it spills into the next one. Tax brackets are not part of the culminating, so we're going to keep scrolling on to hidden taxes. This is also in lesson 4, where we learned that people pay both direct taxes and indirect taxes. The direct taxes are taxes like property tax, your HST, your income tax, the things that you see on your receipt, for instance. The indirect taxes are sometimes known as hidden taxes, and this is because they are included in the selling price of the item. We don't see that. That's part of the number that shows up on the price tag on the shelf, but it doesn't show up as a line on your receipt. We learned in lesson 4 3 common hidden taxes, which are jewelry tax, cigarette tax, and gasoline tax. Jewelry tax is 10% of the wholesale price. So that's the price that the store pays to purchase it, and then they can mark it up as they wish to put it on their shelves. But 10% of the wholesale price of what the store pays is included in the store's asking price. Now, in Ontario, there are 3 taxes for cigarettes. They are all included in the selling price of the cigarette. Then, when you go to buy it, there's an additional HST added on top of the selling price. So technically, it's like 4 taxes for tobacco. The last hidden tax that we talked about were gasoline taxes. We found that there is 10 cents per liter charged for federal and 14.7 cents per liter charged for provincial. Now, HST is not added to the selling price of gasoline as it is already included. So for that one, you get what is shown on the pump. You can look at the support questions to help with understanding the concepts in lesson 4. If you need more in-depth, if you want another example of how was it that you're supposed to calculate those hidden taxes again, you can always jump onto our WASA YouTube channel or our Google Classroom and go back and specifically watch lesson 4. Remember, all of our lessons, all of our video clips on our YouTube channel have the descriptions of what the lesson is and what we talked about in that lesson. So some of the lessons took more than one class, and if it's one specific, if it's only the hidden taxes, you understand the T4s, you understand the T5s, you just want help with hidden taxes, you can go and read the description to find out what part of the class in lesson 4 did it cover. So utilize those features of our WASA YouTube channel. Moving on to lesson 5, the final lesson in our first unit. We talked about making purchases. We learned that if you work in a store, the cash register can calculate how much change you should give a customer, but it is not going to tell you what bills and coins to use to hand over. So we need to still have that skill. There are times when the customer will ask for certain change. They might give more money than required to reduce the number of coins that they will receive as change. And it's good to be able to know how to deal with the amount that comes your way. And it's good to know in case the cash registers fail, if there's no power or whatever happens, you want to be able to have that skill. We talked about getting fewer coins back, that when paying with cash, sometimes we want to pay with as many coins from our pocket just to empty it out. Sometimes we want to receive the least number of coins in return. Sometimes we need some coins. You want to have it for the kids' school fundraisers. You might be scrounging for a loonie to put into the grocery cart so that you can use a cart. There are different reasons why people will give the change they do and ask for the change that they do. In lesson 5, we continued to talk about taxes, where we looked specifically at sales tax. There are 2 types of sales tax that are levied in Canada. There's the provincial sales tax, which is PST, and it's levied by the provinces. Then there's the Goods and Services Tax, GST, which applies nationally. Now, some provinces go with HST. That's harmonized sales tax, where it combines the PST and the GST and just calls it one thing. Every province except for Alberta has implemented either PST or HST. On page 45 of your IL booklet in Unit 1, you will see the breakdown or the rates for each province, what they have deemed as their sales tax. In British Columbia, it's 7%, Saskatchewan 7%, Manitoba 7%, Quebec 7.5%. Ontario has HST, but it's only 13%, whereas Newfoundland, Labrador, Nova Scotia, New Brunswick has HST, but they have it at 15%. Prince Edward Island has just PST at 10%. The territories, Yukon, Northwest Territories, none of it have no PST, and Alberta, which we singled out, has no PST. Please remember to read questions carefully. Both your key questions and when it gets to your culminating activity, you are going to want to be sure that you are reading, is it asking for all the taxes? Is it asking for the provincial sales tax? Because then you're only looking at the PST portion. Is it telling me to look for the tax of goods in Quebec? Because then you're going to want to use 7.5%. If it doesn't state, then assume it's Ontario and we're at the HST of 13%. Just be sure to slow down and read questions carefully. We finished lesson 5 with the Goods and Services Tax, the GST. We know that federal is GST. It's got a rate of 5%. It went into effect in 2008. It's everywhere in Canada. It's applied to purchases. But some examples of goods and services do not pay GST or HST. These are the exemptions: basic groceries, medical devices, most healthcare, medical, dental services, legal aid services, childcare, education services. They are not subject to GST or HST. The harmonized sales tax, or HST, is a combination of federal and provincial. We talked about how it combines them, puts them together. We recognized at the end of lesson 5 that there are similar goods and services to GST that are also exempt from HST. That was all we did for Unit 1. Unit 2 we're going to get to so that we get it all in before the end of our class. And then this afternoon, remember, we're going to cover the last 2 units. We're going to do our Unit 3 and Unit 4 review. But to finish off, our Unit 2 started at Lesson 6, where we talked about buying decisions. We really looked at unit price and found that it's the total price for a package divided by the number of units or items in the package. So we did that amount, that total amount per unit. And it applies for so many things. It's also very important to include your units of measurement when you're doing your work. If you're talking about dollars per liter, make sure you state dollars per liter. If you're talking about kilometers per hour, make sure you state kilometers per hour. In all of the lessons throughout the course, include your units of measurement. Lesson 6 went over incentives to buy. An incentive being something that motivates an individual to perform an action, something that's going to make them want to purchase, to complete a survey, to sign up for a mailing list. You can find those on page 5. It's not a huge part of our culminating, so I'm going to keep on going. Converting currencies. This is a big one. This lesson also set up the building blocks for completing lessons down the road. Remember when we talked about setting up those ratios? How important it is for finding fuel efficiency. We know when we're talking currency that the conversion factor changes daily and multiple times in a day. It had us refresh every 60 seconds. When we did lesson 6, the currency rate, the exchange rate, was $1 Canadian was about 73 cents American. So for every $1 purchased in Canada, Americans pay approximately 73 cents. The flip side from American to Canadian was $1 Canadian was about $1.37. Sorry, did I say $1 American was about $1.37 Canadian. When you want to find the exchange rate, you can easily look it up. When you want to convert, you can look it up, but you can also calculate. Remember, it's a good skill to have. Set up your ratios. Put whatever you want to know on the top and what you have the information for, what you do know on the bottom, just like when we do fuel efficiency. You can practice converting currency and finding the unit prices in the key questions at the end and throughout lesson 6. Lesson 7 was where we jumped into simple interest. Remember lessons 7, 8, and 9 were all kind of together but build off of what we know. Lesson 7 gave us the formula for calculating simple interest. To calculate simple interest, you use the formula interest equals principal times rate times time. Principal is represented as the capital letter P. It's the amount of money that's invested or borrowed. It's that first initial chunk. For simple interest, the interest rate is represented as a lowercase r, where you're simply finding the annual, that means the yearly interest rate. It will be given to you as a percentage, but you need to express it as a decimal. So you want to divide it by 100. The T in simple interest is time, and it's represented as a lowercase t. It's the time for which the money is invested or borrowed. It always has to be expressed in years. So you might have to convert if it's not given to you in years. Support questions for that will help you cement those concepts. Lesson 8 was our bridge from simple to compound interest. We looked at how simple interest is based on the principal amount of the loan only, which gives us linear growth, whereas compound interest is based on the principal amount and the interest that it accumulates on it every period. With that, you get exponential growth. Lesson 9 then focused solely on compound interest. Compound interest uses the formula A equals P in brackets times 1 plus I, close the bracket, to the power of n. This is amount equals principal times 1 plus your interest rate, all to the power of the number of compounding periods. Unlike simple interest, we have differences for our rate and time. A is giving us the amount, which is represented as the capital letter A, and it's our final amount. Principal is the initial amount. A is the final amount. So P is the same. It's represented as the capital letter P. It's that initial amount of money that's invested or borrowed. This time, interest rate is represented as the letter I, because we're not just finding out what is the interest rate from a percentage to a decimal. Now we want to find what is the interest rate per compounding period. And that per means it's being divided by. It's the interest rate, which you're still expressing as a decimal. So you might be given it as a percentage, 5%, but when you divide it by 100, 0.05. and then you divide it again by the number of compounding periods in a year. So when we looked in lesson 1 about salary, we know that monthly is happening 12 times a month because there are 12 months in the year. We know that weekly is happening 52 times a year because there are 52 weeks in a year. Now, there are a few more terms that come up in calculating interest that we don't really look at when we do our salary, because there's also annually, quarterly, and those nobody's really getting paid in, like, the annual salary, yes, but you're getting it broken up into different pay periods. It's not just you have to do all this work 365 days a year and then trust us on the 365th day we're going to pay you this huge lump sum. But they also will talk about quarterly. It's happening 4 times a year. Again, nobody gets paid quarterly. You're often not getting paid 4 times a year, although you could, depending on your contract. If you're a subcontractor, if you're a consultant, sometimes maybe. One of the other terms that happens with calculating interest is daily. And again, maybe you are paid daily. If you're working piecework, you could get paid daily. So it's good to know those bases from lesson 1, but then you can also check out the chart on page 30 of unit 2 in lesson 9, which goes over the annual, semi-annual, quarterly, monthly, semi-monthly, weekly, bi-weekly, and daily. Those compounding periods are necessary for finding interest rate in compound interest as well as the time in compound interest. Time is represented as n in compound interest because it's actually the total number of compounding periods times the number of years it's being compounded. So we can't just say t because it's not just the amount of time in years, it's how many times a year for how many years. Because the culminating activity is more like a project, more like open book, you can be flagging these important charts and tables and formulas as you go. You can highlight them, you can dog-ear the pages, you can grab sticky notes and put it on. You want to remember these terms for calculating. Lesson 10 was the last lesson in Unit 2 and talked about banking transactions. A transaction is a record of money that moves in and out of your bank account. It just keeps track of every penny that is coming in and out. And there are different transaction types, and with them come their own codes. You might want to flag page 46 of Unit 2 to help you with the codes and transactions so that when you're doing your culminating activity, you can answer wholly and completely when it says, what is happening in so-and-so's bank account? If you see DEP, it means that there is a deposit. If it says DEP ATM, you can say it is a deposit that happened at the automated teller machine. You want to be as specific as you can to get those full marks. So do slow down, do take your time, make sure you're reading it carefully and giving as much information as you can to get those full marks. Also, always, I think I say it just about every class, make sure you're showing your work. Make sure that word problems have a word answer. You need that therefore statement. Things to keep in mind as you complete your culminating activity. Lesson 10 talked about online banking. It allows all its users with internet connections to access their financial information and management activities 24/7. They strive to be secure, but we also know that there are some security issues that can arise. Debit card banking offers convenience. You can use the ATM. There are so many services that you can do with your bank card. If you want that extra practice, if you want to practice reading statements, be sure to try your hand at the support questions. We are at the end of our first half of the review. We looked at Unit 1 and 2. This afternoon we're going to look at 3 and 4. That if you want the quick and dirty synopsis, you can go to our YouTube channel and find the recordings. If you have any questions about any of the material, about the culminating activity, please do not hesitate to reach out through phone, email, Facebook, whatever is most convenient for you. I hope that you all have a wonderful rest of your day. Remember, I will be interrupting your regular broadcasting this afternoon just to finish off our review.